Hello guys, welcome back to ESENtaxa. Here, and in this video I wanted to discuss about the way to optimize your investment in Italy. If you purchase a property, if you want to put this property under Airbnb style activity, or you simply want to put it under ordinary rent, and how you can basically have a higher return on investment and pay less tax possible. If you're new in this channel, ESENtaxa talks about how to optimize taxes, especially in Italy, but we also cover Belgium as a jurisdiction, and we explain people how to optimize their taxes in this country, whether they are tax resident or not tax resident. So as you are an investment person that wants to have some important investment, right, also in real estate, but also on other assets, or simply because you want to relocate in this country and you want to exploit the best tax benefits such as the Forfait Regime, Forfait Regime, and other similar ones. Now, in this specific video, I want to talk about how you can exploit certain kind of tricks, especially 3 important strategies that I wanted to show you to optimize your taxation and increase your net in your pocket when you purchase a property and when you put this property under rent. Now, we have already made a video here in this channel which is extremely details of how to use and exploit the Airbnb style activity in Italy, all the possible scenarios. I'm going to put the link in the description below this video, but here I want to focus on 3 important elements that allows you to immediately understand how to improve your rental income, either under tourist situation or as an ordinary rental income in Italy. First of all, let's start with the situation when you want to calculate your taxation in Italy. So because you want to understand how much I need to leave to the state and how much I'm going to gain whenever I purchase a property. In general cases, you may have heard about this famous flat tax in Italy for rental income. Here we are not going to talk about taxes when you purchase a property, but we're going to talk about taxes when you put your property under rent in Italy. So, we have the famous 21 flat tax. It's a flat taxation which substitutes the progressive taxation in Italy, which starts from 23% to 43%. So you choose, it's an optional tax regime, this one. It's up to your convenience. And whenever you put a property under rent, you have the option. So either I choose for this one or the RPF system. Now, which spans from 23, as I said before, up to 43. Which is the difference between those two? It seems that this one is more convenient because you have a lower rate compared to 23% rate. But the big difference is that here I can deduct my expenses, okay, strictly related to the property, but also I can remove from my taxes all 50% of my refurbish or reconstruction or renewal expenses for my property. I'm going to a little bit more in details about this point later on this video. Now, what is the first thing that I need to consider? Whenever I purchase a property, I know that I have either this 21% or these rates that are applicable on my income. So this is based on my income, which means that if I have multiple type of incomes, if I have already an activity, at the top of my activity, I add my rental income, everything together, the total of all those incomes, they flow in my RPF taxation, okay? While if I'm using this one, my employee income or self-employee income, for example, will be taxed at RPF, and this one, the rental income will follow a separate taxation of 21. So they follow 2 types of taxation separated. In most of the cases, people are looking for this solution. It's easier, yes, obviously, especially if you have already another income, okay? Because of course this one is lower. But at the top of this, what you have to keep in mind is that in Italy you have also to pay the IMU, which is the IMU. The IMU is the annual property tax, okay? So it's something that has to be paid at the top of your rental income. So whenever you calculate your return on investment, you have to consider the IMU that it's based on the cadastral value, on a value that the commune assigned to your property, so you cannot do anything about this value. The only thing you can do is to search a property with the lower cadastral value as much as possible in order to pay less IMU possible, which is the annual property tax. And at the top of this tax, you pay the 21% on your rental income. So if you made your calculation in average cases, you end up paying something between 30%, Why I'm saying 30%? Because this is normally, for example, for a 100 meter square property in a big city like in Rome, Milan, Turin, Bologna, this kind of big cities, you might pay something like 1,600 euro per year, even sometimes 2,000 euro per year for this. And then if you sum this value, annual amount of money to pay, of course the calculation it's hidden. I mean, there are ways to calculate this number and is not subject of this video, but if you have this amount to pay on yearly basis and you have to sum this amount of money with this, you're going to have a taxation of 30 up to 35%. And I'm using the 21% option, I'm not using the 23 up to 43%, so imagine. Now, which is the first trick here? Here there's a tax, so we always give you tricks. The first trick is that if I'm living in this property, if my property is enough big to host someone else, and I have enough space to live in this property, and the rest of the property is well separated with this separate toilet, separate bathroom, separate areas or rooms, I can basically put my entire property under rent. But in Italy there is this law that says if I'm living in this property, it becomes my primary residency, and my IMU is not due at all. So basically I'm get rid of this totally if I'm living in the property, and part of my property is basically under rent, which this means that I have to live in Italy. I'm tax resident in Italy for this scenario. It's not for non-residents, for who wants to invest from another country. This is a scenario if you want to relocate in Italy. I want to also invest. I want to have an outside income, rental income, in parallel with my principal activity. I put my residence in Italy. In that specific home, I don't pay the IMU, and my only tax rate will be 21%. Okay? Now, the second optimization that you can do, so this is the first one. I move my primary residence here, and my tax rate drops down to 21 flat. Or, with the second point, I can also put down this 21% flat down to 10%. A lot of people are not aware of, especially foreigners are not aware about the fact that you can have 10% flat tax instead of 21. Which are the conditions? The 10% flat tax works if you respect a certain threshold of your rental income. So first criteria is that your commune of your choice in Italy must be considered like a high populated area. Okay, almost all the provinces and the commune, the big cities are considered high populated area, but if you're looking for a place in a rural area, for sure you could not apply for this 10% flat tax. So the first criteria is that you are in a highly dense populated area. The second criteria is that the rent that you can ask to your tenant should not pass a certain threshold. Now, how do you calculate this threshold? It's calculated by a certain kind of public office, or it's called, like in Italy, an associations for owners, landlords. Those associations exist only in the city with high dense population area. So if you don't find those associations, it means that your area is not highly dense populated and you cannot apply for this 10%. And then once you have these associations, they will calculate for you the value of your property in terms of rent. So they will tell you exactly, in order to be compliant with this 10% flat tax, we are going to tell you exactly how much you should ask, and which is the limit. Because the idea behind this law is that you can put your rent not so high in order to give more people the chance to habit that highly dense populated area, you see? And then the government is basically pushing owners to calm down the prices of the rent, and in exchange they give you a tax discount of 10%. So that's the idea behind the law. And then if you respect the threshold, and it's fine, you can apply this 10% flat tax. Sometimes these associations give you this paper, you can attach this paper to the contract, and then the tax agency will accept it, and then it's fine. When it's convenient to do this? Well, when the market price of that specific town, it's very close to what the associations put as a threshold. So if the things are not so far, for example, in big cities, it's not easy to find the price of the associations at the same level of the price of the market, because then you have to renounce to so much rent that then it makes sense to pay 21%, okay? So this is the calculation that we can help you to do also in our consultancy services. And in the description below the video, you will have our link, Calendly, to have a consultancy with us in which we can explain exactly how to help you. Also, if you want to invest in Italy for rental income, for Airbnb style income, etc., etc. Or you can write us at info@ESENtaxa.com, in which we can explain you or provide your consultancy also via mail in case you need, again, assistance. The 10% flat tax works very well also for non-resident, for somebody that wants to invest in Italy and not living in Italy, which means that these kind of people, they have to pay the IMU because they're not living anymore in the property, because here we are considering the scenario where you're living in the property and then the IMU is exempt. So you pay this 10% plus the IMU, but the IMU, it's discounted by 25%. So you calculate your IMU, you discount it by 25%, and then you pay 10% of your rental income. So this reduced flat tax regime gives you also the discount of the IMU. And the third point, which is helpful for non-resident, resident, and for those who wish to apply for the RPF scenario, is that you can have 50% of your refurbished cost back from the Italian states, and this works only if you apply for this tax scheme. For example, if I have refurbished my home and my expenses are like 20,000 euro, the Italian state gives me back 10,000 euro. Okay? And this amount of money will be given back to you in a span of 10 years. So every year you get back 1,000 euro for 10 years. And then you recover the 50% of the cost. Okay? And you have renovated your property. And then this 1,000 euro every year will be subtracted against the taxes that you pay with this RPF system. So it means that your real tax pressure is not going to be 23, but it's going to be less than 23, maybe even less than 21%. And for example, if you have your rental income of 1,000 euro per year, if you put your property in Italy under rent, 1,000 euro per year, on the end of the year, you have a rental income in Italy of 12,000 euro. Just make simple examples. And then if you calculate 23% on this, it's about 2,600 euro, more or less, of taxes to pay on a yearly basis. But you have this 100,000 euro to subtract on taxes, and then you pay 1,600 euro in taxes on a yearly basis, and then your tax pressure drops by the half. So it's going to be 12.5%. I'm just rounding the calculation, but this is the principle. So if you have all these deductions against taxes because of your renovation project, then you can, of course, squeeze the RPF taxation as well, something that you cannot do with the flat tax, okay, of 21%. Now, guys, this is all about calculation. We can also provide you a tax simulation. In our description below this video, you will have the link to our Calendly services. You can also book a call for a tax simulation in which we can tell you and help you to understand if an investment like this one or similar to this project could work in your situation, could make sense or not. Thanks for watching this video. Stay tuned on ESENtaxa if you like to have this kind of content for free, and notification bell, like button, and subscribe the channel to help us grow as a channel to inform you whenever we have new content that you might be interested in. See you and thank you.